Hello, people. Hey, everyone. Yes, people, come fast, come fast. Good evening, guys. Good evening, good evening. People, come fast. Hi, everyone. What's up? What's up? What's up? Good evening, good evening, good evening. Yes, people. Hello, everyone. All right, guys. So today we are going to start with Banking Regulation Act. Banking Regulation Act 1949. Banking Regulation Act 1949. People, those who are really passionate about learning banking laws, people, this is for them. Aishwarya, good evening, Aishwarya. How are you? People, this session is specifically for those people who are very passionate about learning banking laws. For you people, I have come live today, people. And don't worry, people, today's class is going to be like 1.5 hour max, not more than that. Okay. I have picked all the important topics from the chapter of banking laws and I have included in my notes. Okay. So we're going to have super huge fun today, people. Banking laws is also as interesting as insurance laws. People, for insurance laws, yesterday I received a lot of love and support from you guys. It really means a lot, people. Thank you so much. So people, with the same enthusiasm, let's complete today the banking laws. Yes, people. All right. So give me a quick thumbs up, guys. Those who are watching right now, give me a quick thumbs up if you guys are with me. All right. So people, our schedule is going to be that today we'll complete with banking laws. Tomorrow onwards, we are going to solve MCQs. Tomorrow onwards, we're going to solve MCQs. Hi, Veni, how are you? People, just 1 second, I'll just turn on the AC. Yes, people. People, from tomorrow onwards, tomorrow, day of tomorrow, and the day after tomorrow, 3 days, we're going to solve as many MCQs as possible for the subject of corporate economic laws. Okay. So with this, people, let's get started with the Banking Regulation Act 1949. 1949. The first important topic is, people, forms of business in which banking companies may engage. What all business banking companies can engage in, we're going to understand in this topic. Yes, people. So there are how many business people? There are 9 types of business that banking companies can enter into. There are 9 types of business in which banking companies can enter into. Let's understand what are those 9 activities. Well, the first one is people acting as an agent. What is the meaning of that? Let's understand this using an example first. SBI acts as an agent for the government for what purpose? For pension disbursements. To whom? To defense personnel and civil pensioners. Which means for people, if government wants to pay pension to civil pensioners or defense personnel, SBI will act as an agent, ensuring that money is received by defense personnel and civil pensioners. Very easy. So SBI is acting as an agent for government. It can also act agent for individuals and authorities except managing agent. Perfect. The second is people, we all know this, issuing loans and securities. They issue guaranteed underwrite. What is the meaning of underwrite, people? Can anyone tell me the meaning of underwrite? I have told you the meaning of underwriting in my marathon day 1 lecture. In my marathon day 1 lecture, I have told you the meaning of underwriting. Aishwarya, Veni, guys, just let me know the meaning of underwriting. Okay, until then, I am continuing with my next topic. Or manage security. What is the example, people? HDFC Bank and ICICI Bank act as a lead managers and underwriters in LIC IPO. In LIC IPO, HDFC Bank and ICICI Bank were the lead managers. Simple, people. Next, guarantee and indemnity business. Guarantee and indemnity business. What is the meaning of this? Let's understand this using an example. Punjab National Bank provided bank guarantee in the infamous Nirav Modi fraud case. Who provided bank guarantee? Punjab National Bank provided bank guarantee. Which means what? Banks can also provide guarantee services. Backing LOU, letter of undertakings, issued to overseas branches. That means they are also giving guarantees. What is the meaning of indemnity, people? What is the meaning of indemnity? Let's say A has entered into a transaction with B and A has given him bank guarantee. A has given him bank guarantee where HDFC Bank is guaranteeing B that if A will not pay you the money, B will pay you the money. Okay. Now, meanwhile, HDFC Bank will also enter into an indemnity bond with A, saying that if a situation arises where you did not pay money to B and we end up paying money to B, in that case, you have to promise that you will pay the money to us. You have to promise that you have to pay the money to us. You have to indemnify us for this purpose. Easy, people. This is called as guarantee and indemnity business. Are you able to visualize? Are you able to visualize, people? Visualization is very, very important. Okay. So the meaning of underwriters. Okay. Underwriter means, people, what? A is promising B. Let's say I am an underwriter for LIC IPO. I am promising LIC IPO that if public do not purchase your shares, we will purchase the leftover shares. This is called as underwriters. We promise to purchase the leftover shares in case of IPO if public do not purchase your shares. Easy, people. This is called as underwriting. Next is, people, managing and selling property. Let's understand this using example. SBI seized and auctioned properties under SARFAESI. SARFAESI we are going to understand in the last chapter. Auction of Kingfisher House in Mumbai. So while Kingfisher Airlines was engaged, Vijay Mallya was engaged in a fraud for Kingfisher Airlines. In that case, people, banks were selling the properties of Kingfisher Airlines and Vijay Mallya, which means what? Banks can also manage and sell the property, acquire, sell property to recover the loan amount. Easy. Next, acting as a trustee. IDBI Trusteeship Services acts as a trustee for bondholders and mutual funds. They also act as a trustee or executor of wills or trust. Next, employee welfare activities. RBI has a dedicated RB Reserve Bank Staff College and Pension Fund for employees post retirement benefits, which means what? They can also engage in employee welfare activities. Easy people. Construction and property management. Bank of Baroda built new large head office in Mumbai's Bandra Kurla complex. For what purpose? To expand its operation, which means what again? It can also acquire or build premises for banking operation. Easy. Next is acquiring other businesses, merge with or acquire finance related businesses. What is the meaning of that? Let's understand this with an example. Union Bank of India acquired Andhra Bank and Corporation Bank in 2020. PSU Bank consolidation, which means what again? It can also merge with or acquire finance related businesses, right people? And the last is incidental or conducive business activities. Any related activity to business, they can also engage in. What is the example of this? Paytm Payments Bank was approved to offer mobile wallet services. Is mobile wallet services banking services? No, but they are incidental to banking service. They are connected to banking services. So they can also engage in activities required or beneficial to banking. So banking companies can engage in 9 types of businesses. Number 1 is acting as an agent. Number 2 is issuing loans and securities. Number 3 is guarantee and indemnities by business. Number 4 is managing and selling property. Number 5 is acting as a trustee. 6 is employee welfare activities. 7th is construction and property management. 8th is acquiring another business, and 9th is incidental business. Easy people. Good evening, Jyoti Kumari. How are you? Okay. So these are the forms of business in which banking companies may engage in. People, the reason why, one more reason why I'm teaching you banking laws is because people, even if there is a case where you are not able to recollect the answer for insurance chapter, in that way banking laws will come to protect you people. Banking law will come to protect you. So just watch this marathon lecture. Try to observe as much as possible. People, I know it's a last minute preparation. I know it is really little difficult for you to prepare again a new chapter. But people, at least try to observe as much information as possible. Okay, at least for your knowledge purpose. Tomorrow, we never know, you may be appointed in a banking company, right people? In that situation, this chapter is the supremely important chapter. Understood people? So do not leave any chapter people. Try to learn as much chapter as possible. What am I saying? Try to cover as many chapters as possible people. My goal is people, if I am teaching you 100% of my syllabus, I also expect you to learn 100% of your syllabus people. Don't leave anything. Don't leave anything. This can come for 5 marks. Such a simple. This answer can be such a simple answer people. If in exam question is asked in what type of business banking companies may engage in, so for 7 marks, don't you think people this is such an easy answer, right people? So why do you want to remove yourself from the possibility of getting marks? Very easy people. All right people, with this let's begin the next topic, that is licensing of banking companies. Licensing of banking companies people. Tomorrow if I start a banking business, it is not possible. No Tom, Dick and Harry can start a banking business. You will require some qualification, you will require some conditions to follow banking business. Now what are those conditions? Number 1 is people, you will obviously require license from RBI. Number 2 is you have to apply to RBI for license about capital, promoters, board, business plan. Number 3, you should be financially sound people. Example, RBI refused to issue banking license to several small entities in 2014. For what reason people? For lack of financial robustness. Where they were not financially sound, hence RBI did not give them license to start banking business. So you should be financially sound. Number 4 is people, conduct of business. Operation must not harm depositors' interest or involve fraud or misleading practices. You should not be engaged in fraud or misleading practices. RBI rejected Sahara India Financial Corporation's request to expand. For what reasons? For citing past regulatory violation. They were not following the KYC norms. For that purpose, RBI did not allow them to expand. Next is people, Foreign bank conditions. What is the meaning of this? Deutsche Bank, HSBC and others operate in India only after RBI confirmed reciprocity. What is the meaning of this, people? If Indian banks are allowed to operate in foreign countries, foreign banks are also allowed to operate in Indian countries, India. No discrimination should exist against Indian banks in that foreign country. Okay. Next is, people, RRB exception. What is the meaning of this? Regional rural banks are governed by a special act that is called as Regional Rural Bank Act 1976, not the Banking Regulation Act. So example is, people, Prathama UP Gramin Bank operates under RRB's Act with sponsor bank support. Basically, people, these types of banks are government created, where central government, state government and a sponsor bank together they set up this bank, people. They are not like a usual commercial bank to come under Banking Regulation Act 1949. Yes, people. So hence they are governed under RRB's Act 1976. Now RBI can cancel your banking license when? If you stop your operation. RBI cancel the license of Mapusa Urban Cooperative Bank in Goa in 2024, not conducting their banking operation. So if you do not conduct your banking operation, your license will be cancelled. Number one. Next, people, banks violate rules in the same way if you do not follow KYC norms. Punjab and Maharashtra Cooperative Bank face restrictions and near cancellation due to fraud. Next is, your banking operation are not in the public interest. Rupee Cooperative Bank's license in 2022. Why? They were not following the KYC norms, people. All the rules that a bank is supposed to follow, they were not following the rules. For that purpose, their license were cancelled. Now, people, if your license is cancelled, don't you have the right to be heard? Yes, you have the right to heard. Right to appeal. The aggrieved bank can appeal to central government within how many days? Within 30 days. Some cooperative banks have appealed post cancellation, but government decision is fine. Okay, this is not important, people. So basically, if your license is cancelled, you have the right to be heard. Very easy, people. All right, guys, everyone with me? Jyoti Kumari, Veni, Aishwarya, guys, everyone with me? Give me a quick thumbs up. Is this chapter interesting, people? Guys, it's a small request that share this YouTube link to as many people as possible so that we can have a highly interactive session. Okay? Yes, people. Yes. Okay. So with this, let's continue to the third topic, that is restrictions on loans to directors and own shares. Aishwarya, where are you from? Aishwarya, where are you from, Aishwarya? Jyoti Kumari, where are you from? Jyoti Kumari, I forgot. Where are you from? Guys, answer Chennai. Oh, okay. Perfect. Aishwarya, have you come to my live sessions by any chance? Past live sessions? எந்த ஊருங்க நீங்க? சென்னையில எந்த இடம்? சென்னையில எந்த இடம், madam? Okay, guys. Aishwarya, answer my question. Until then, I am continuing with my next topic. Restrictions on loans to directors and own shares. Good evening, Vaishnavi Nagaranjan. How are you? Yes, people. So this section is meant to forbid banks from granting loans in certain cases to prevent what? To prevent misuse and conflict of interest. Oh, Tambaram, first class. Okay. Now, what are restrictions? Number one restriction is loan to any of directors. You are not supposed to give loan to any directors directly to its board members. Number two, loans to firms or companies where director has a interest. Banks cannot lend to companies where directors hold stakes. Yes, sir, I have attended your live classes. Fantastic, fantastic. Okay. Loans to individuals from whom director is a guarantor. Bank cannot lend to anyone guaranteed by a director. Let's understand this using an example. Mr. C is a director and has guaranteed a loan for Mr. D. XYZ bank cannot give a loan to Mr. D. People, obviously, people, you should not give a loan to anyone where director has given a guarantee, because it will create a conflict of interest. Number 4 is loan against security of bank's own shares. This is interesting, people. This is very, very interesting. Banks cannot accept its own shares as loan collateral. XYZ bank cannot give loan by taking XYZ bank's own shares as security. Which means what, people? Let's say I am owning the shares of HSBC Bank. Now I need a loan from HSBC Bank, and they asked me a collateral. So I told them that you take my shares. Which shares? HSBC Bank shares as collateral. This is not allowed. This is not allowed. Can anyone tell me what could be the possible reason for this rule, people? Vaishri Nagaranjan, Aishwarya, Veni, Jyoti Kumari, can you guys tell me what could be the possible reason for this rule to be made, where banks cannot accept its own shares as collateral while they are giving loans to people? What could be the possible reason, guys? What could be the possible? People, whatever is coming to your mind, just tell me. Whatever is coming to your mind, just tell me what could be the possible reason for why a bank cannot give a loan. Bank can give loan, that is not a problem. But bank cannot accept its own shares as collateral against the loan that they are giving. Yes, people. People, this is very, very interesting rule. This is very, very interesting rule. Yes, people. Yes, people. Can you tell me what could be the possible reason for why a bank cannot accept its own shares as collateral? Sir, can I collate XYZ bank? Carry Chris one Simas. Yes, people. So basically, people, the reason is if bank, if they fail, if they fail, let's say bank has taken some decisions because of which they are on the verge of closing down. Basically, if a bank fails, in that case, people, then this collateral will be of no use, because I can't pay rent to the house I own, and similarly, bank cannot give loan on their own shares. Perfect, carry Chris, perfect. Basically, people, if there is a situation where banks run out of money, if bank is failing, in that due to bad loans, due to defaults, in that case, people, bank share price will reduce. The bank share price will reduce. What is the use of that collateral? What is the use of that collateral? Basically, people, that is the main reason why a bank cannot accept its own shares as collateral. This is number one reason. Number two reason is, people, bank can also manipulate its share price. Bank can also manipulate its share price to rise or decrease. In that case, it should never be a case where a bank is accepting its own shares as collateral. As simple as that, people. Yes, people, everyone with me? Give me a quick thumbs up, guys. Of bank's own shares. Banks cannot accept its own shares as loan collateral. So, people, there are 4 restrictions. Number 1 is no loan to any of the directors. Number 2 is loans to firms or companies where director has interest, not allowed. Number 3 is loans to individuals where director is a guarantor, not allowed. And number 4 is bank cannot accept its own shares as collateral. Right, people? Perfect. So, we are done with the restrictions on loans to directors and own shares. Perfect. Next, RBI's control over loan policies. People, this first chapter, Banking Regulation Act 1949, this is little lengthy, but don't worry, people, this is very comparatively, it is very much shorter to insurance laws. Okay, so don't worry, within half an hour, this chapter will be done, and the remaining next 2 chapters are super short. Okay, within half an hour, those 2 chapters will be completed. So we will be done with the Banking Regulation Act, banking laws with finality. Okay, people, with this, let's move on to the next topic, that is RBI's control over loan policies. RBI's control over loan policies. RBI has the authority, RBI has the power to regulate and supervise, how banks issue loans and advances by issuing direction, by issuing instructions. On what topics, people? Let's understand. There are 1, 2, 3, 4. Number 1 is purpose of loan. RBI can restrict or allow loans for specific purposes. RBI may direct banks to not to lend loans for speculative activities like stock market, like gambling. For that purpose, you cannot take a loan from a bank. RBI can give strict instructions to the bank that you cannot lend money for speculative, for gambling purposes. As simple as that, people. Number 2 is, people, this is pure logic. If a question is asked in the exam and if you are not able to understand anything, just simply write this point down. Okay, whatever point is coming to your mind, people, just write it down along with examples. And if you go to the module, you will realize that whatever points have come to your mind, it was all making sense. Okay, so never think that I have not learned this topic, so how will I write answer in the exam? Never ever come such doubt. Never ever let such doubts to come to your mind, people. You can be absolutely right. Everything is made basis on logic. Right, people? So number 2 is, people, margin requirements for secured loans. Let's understand this using an example first. For a loan secured by gold, RBI may require gold's market value to cover at least 25% more than the loan amount. Sir, I did not understand anything. Basically, people, if you are taking a loan of, let's say, 75,000 rupees, you are taking a loan, you have to keep gold value for 1 lakh rupees. If you are taking a loan of 75,000 rupees, you have to keep gold worth 1 lakh rupees as collateral, as security. Right, people? Because, people, the reason is stock market and commodity market are inversely proportional. Stock market and commodity market are inversely proportional. If stock market is going amazingly well, commodity market, gold will go down. So in that case, you should have a proper margin. If you're taking a loan of 1 lakh rupees, you cannot keep gold worth 1 lakh rupees. You have to keep gold worth of 1,25,000 rupees. Right, people? Next, interest rate regulation. RBI may instruct banks to charge not more than 10% interest on agriculture loan to help farmers. To give farmers loans at low interest rate, RBI can give instructions to banks that you cannot charge farmers interest rate more than 10%. Very easy, people. Number 4, limits on loan amounts for a single borrower. Example, a bank with 100 crores capital cannot lend 500 crores to a single borrower. Lending must be done within safe limits, which means what, people? If bank is operating, bank is earning 70 to 80% of its income by giving loans to only one person. If that one person, in case if it defaults, then the bank will shut down, people. So in that case, this rule has been made so that bank does not depend on a few borrowers. Bank is not dependent on a few borrower. RBI limits how much a bank can lend to one borrower based on bank's capital and reserves. So for 4 points we learn, people. Number one is purpose of loan. RBI can give directions to banks on four topics. Number one is purpose of loan. Number two is margin requirements. Number three is interest rate regulation. Number four is limits to loan amounts for a single borrower. That's it, people. We are done with the RBI's control over loan policies. Easy, people. Carrie, Vaishnavi, Aishwarya, Veni, Jyoti Kumari. Is it interesting? Banking laws, are you finding it interesting now, guys? Yes, people. Yes, people. Yes, people. Give me a quick thumbs up, guys. Perfect, perfect, perfect. Next topic is, people, SLR, statutory liquidity ratio. Statutory liquidity ratio. Carrie, Chris, just tell me one thing. How many of you guys have decided to learn banking laws and not insurance laws? And how many of you have decided to learn insurance laws and not banking laws? And how many of you have decided to learn both the laws? Just let me know. How many of you have decided to learn insurance laws and not banking laws? How many of you have decided to learn banking laws and not insurance laws? And how many of you have decided to learn both? I'm very, very curious to understand this, people. Decided both. Fantastic, Jyoti Kumari. Fantastic. Jyoti Kumari, can you tell me what is the reason for you to learn both the topics, guys? Aishwarya, tell me why do you want to learn both the topics? If you learn insurance law, that is enough, right? Why do you want to learn both? I am very curious to know your reasons. Veni has decided to learn both. Aishwarya has decided to learn both. Jyoti Kumari has decided. Fantastic. Fantastic. Carrie, Chris, the way you have answered the question about why banks cannot accept its own share as collateral, I was amazed, Carrie. Amazing. So people, just let me know your answer. Until then, I'm continuing with my next topic, okay? Perfect, perfect. The next topic is, people, statutory liquidity ratio. Statutory liquidity ratio. What is the meaning of this? Basically, people, banks have to keep certain percentage of deposits in liquid form. In liquid form. What is the meaning of liquid form? Liquid form means, people, what? Cash, gold, or approved government securities before lending to customers. So before bank start lending to customers, they have to keep certain percentage of their deposits in cash form, gold form of, or approved government securities. Why? So that liquidity. What is the meaning of liquidity, people? So that it can be easily converted into cash. Minimum percentage of banks deposits that must be kept in liquid assets. Okay. What are the provisions? Every bank must maintain liquid assets in India. Number one, RBI sets the SLR percentage, which cannot exceed 40% of total deposits. So you cannot keep more than 40% of your deposits in liquid form. You cannot keep more than 40% of your deposits in liquid form. Next, calculation is based on deposits as of last Friday of the second preceding fortnight. People, this is very, very interesting. Can anyone tell me the meaning of this rule, people? This is the most difficult thing in the banking regulation act 1949. If you are able to understand this, that means, people, you are on top of the world. You are on top of the world, people. Sir, because I didn't want to leave any chapter for it. Perfect, Jyoti Kumari. That's the spirit. Amazing, amazing, amazing. Yes, people. Can anyone tell me the meaning of this rule? Calculation is based on deposits as of last Friday of the second preceding fortnight. Second preceding fortnight. People, basically, fortnight means 15 days. Fortnight means 15 days. So in 1 month, there are 2 fortnights. So preceding fortnight means what, people? Let's say June 1, June 15, June 15 to June 30. Let's say we are in July now. We are in July now. Now preceding fortnight means what, people? Preceding fortnight means this. Now second preceding fortnight means June 1 to June 15. Now last Friday of June, last Friday of June 1 to June 15. This is called as second preceding fortnight. Last Friday of second preceding fortnight. As easy as that. Now let's read it again. Calculation is based on the deposits as of last Friday of which fortnight? Of no of is it preceding fortnight? No, it is second preceding fortnight. It is second preceding fortnight. Understood, people? Understood? Everyone with me? Give me a quick thumbs up, guys. Give me a quick thumbs up. Jyoti Kumari, Veni, Carrie Chris, Vaishnavi Nagaranjan. Guys, did you understand the meaning of last Friday of second preceding fortnight? Perfect, perfect, perfect. People, just take a quick screenshot of this, okay? Take a quick screenshot of this. It will be very, very useful in your exam. Second preceding fortnight, last Friday or second preceding fortnight. Fantastic, guys. Fantastic. Now, what do you mean by liquid assets? Cash, gold, approved securities. These must be valued at current market price. Okay. Example: if banks has deposit worth 10,000 crores, RBI sets SLR limit at 18%, which means what? Bank has to keep 1800 crores in liquid assets. What do you mean by liquid assets? Cash, gold, or approved government securities. Failure to meet this will lead to penalties. Very easy, people. Now, why is SLR important? It ensures liquidity. Banks can meet depositors' withdrawal demand anytime. Suddenly, if there is a case where people are suddenly withdrawing, all people are withdrawing money from the bank. In that case, this SLR will be very, very beneficial. Number two is controls inflation. Higher SLR means what, people? RBI now ask the bank deposit more money with the in liquid form, which means what? If banks are depositing more money in liquid form, that means they can lend less. If they can lend less, people, what will happen is people will not have money. If people will not have money, then the demand will be less. If the demand will be less, the price will go down. If the price will go down, inflation will be balanced. Very easy, people. People, everything is very, very important. Okay. If SLR limit increases, then banks lending decreases. If bank lending decreases, loan decreases. If loan decreases, purchasing power of people will decrease. If purchasing power of people will decrease, then the demand for the demand for goods will also go down. The demand will go down. The price will also go down. This is the basic reason why it can control inflation. Inflation will be controlled. Understood, people? Yes. Next, people, prevents bank failures. Banks maintain reserves and don't overlend. Supports monetary policy. RBI adjusts SLR to control credit flow in the economy. So this is the benefit of SLR. SLR, people. Okay. Everyone with me, give me a quick thumbs up, guys. Yes, people, give me a quick thumbs up. We are almost done, people. We are almost done. We are almost done with the first chapter. Give me a quick thumbs up, guys. Perfect. Yes. Next, people, maintenance of cash reserve by non-scheduled bank. Can anyone tell me the meaning of non-scheduled bank, people? Can anyone tell me the meaning of non-scheduled banks? Yes, Vaishnavi, Veni, Aishwarya, Jyoti Kumari. Can you guys tell me the meaning of non-scheduled bank? Non-scheduled bank. People, there should not be a single word in the syllabus that you are not able to understand. There should not be a single word in the syllabus that you are not able to understand. Every single word should be very easily be understandable by you. Yes, people. Vaishnavi, Veni, Aishwarya, Jyoti Kumari. Yes, guys. Please tell me the meaning of scheduled bank or non-scheduled bank. Guys, if you know the answer, just tell me the answer. If you do not know the answer, that's absolutely okay, people. Just give me a thumbs up so that I don't wait. Otherwise, I will be thinking that you are typing. Yes, people, okay. I will continue with the next topic. I will continue with the topic. Until then, people, just let me know what do you think could be the meaning of scheduled bank. What do you think could be the meaning of scheduled bank? Whatever is coming into your mind, people, just let me know. Whatever is coming to your mind, just let me know. Carrie Chris, answer this amazing question. So from that answer, I understood, people, your logic is fantastic. Your logic is fantastic. Okay, guys. Okay, perfect. What is a scheduled commercial bank? Banks not listed in the second schedule of RBI Act 1934, usually smaller or cooperative banks. This is not the meaning that I am expecting from you. Veni, no. I want to know the meaning as if you could be able to explain it to a 16, 17, 18-year-old. Scheduled banks come under government and RBI. Okay, Vaishnavi Nagarajan, perfect. Guys, whenever I ask you the meaning of any concept, I want you to tell me not the meaning that is written in syllabus. Okay, I want you to tell me as if you will be explaining to a 15 or 16-year-old. Okay, perfect. People, basically, banks enjoy a lot of benefits if they are listed in the RBI schedule. Banks enjoy a lot of benefits if they are listed in the RBI schedule. They're listed in the RBI schedule. And if the banks are not listed in the second schedule of RBI Act, which means they are non-scheduled banks. Okay. Now, why would a bank not get itself listed in the second schedule of RBI Act? Why would a bank not get listed in the second schedule of RBI Act if they are getting a lot of benefits? The reason is, people, they are supposed to follow a lot of conditions so that they could be listed in the scheduled bank, in the RBI schedule. Okay, banks have to, typically a small bank like cooperative bank, right? Aishwarya, right? Perfect. Basically, people, if the bank is following all the rules and conditions that has been told by RBI, they could be listed in the schedule, and they will also enjoy equal benefits. If the banks are not able to follow all the rules and regulations, in that case they could not be categorized as scheduled, as a second schedule of RBI Act. This is the basic reason, people. This is the basic reason. Okay. So basically, if you follow rules and regulations mentioned by RBI, you will be categorized under schedule. You will become a schedule bank. Schedule bank will enjoy a lot of benefits. If you are not able to follow all the rules like minimum capital requirements, XYZ rules, if you are not able to follow, in that case, you will not be considered as a schedule bank. And you will not enjoy the benefits. Right, people? Just take a quick screenshot. Just take a quick screenshot. Okay? Perfect. Now, Section 18 requirement. Non-scheduled banks must keep 3% of total time and demand liabilities as cash reserve. So if bank has got 1000 crores liabilities, they must keep how much? 30 crores as cash reserve. They must keep 30 crores as cash reserve. Where to maintain reserve? Can keep reserve in its own cash vaults, current account with RBI, SBI, or notified banks, or partly in cash or partly in current account. Very easy, people. Now they have to report to RBI, must report compliance to RBI by 20th of each month. Monthly report you have to submit, people. And the difference from scheduled bank. Scheduled banks follow section 42 of RBI Act, usually higher than 3%. So people, scheduled bank have to keep more cash reserve. Scheduled bank have to keep more cash compared to non-scheduled bank as reserve. Scheduled bank are supposed to keep more cash as reserve compared to non-scheduled bank. Understood, people? Now, are you able to understand the difference between scheduled bank and a non-scheduled bank? Aishwarya, Veni, Vaishnavi, Jyoti Kumari. Perfect. People, again, like yesterday, there are some topics that I expect you to learn on your own, people. Read, understand, and learn on your own, because they are all very easy people. Board of directors composition. Okay. So I hope everyone have got my notes. I hope everyone have got my notes. Give me a quick thumbs up, guys, if you have my notes right now. Give me a quick thumbs up if you guys have my notes right now. We are almost done with this chapter. Veni, yes sir. Aishwarya, Vaishnavi Nagaranjan, Jyoti Kumari, Carrie Chris, everybody, just tell me if you have got my notes. Vaishnavi Nagaranjan, did you not fill the form, Vaishnavi Nagaranjan, on the description link below? Okay, guys, after this marathon video ends, after this banking laws video ends, I would request you to please go and get my notes from the description link below. Okay, guys, these notes are very, very useful, people. They are all liquid gold. These notes are all liquid gold. The reason is the language has been simplified. I've included a lot of examples so that you will not face any hurdles while you are learning the chapter. Okay, guys? Vaishnavi Nagaranjan, Aishwarya, am I clear? After this video ends, get my notes from the description link below. Perfect. So people, board or data composition, I would expect you to learn on your own. Number 2 is board management. Again, people, read, understand, and learn. Very, they're all as similar to Companies Act. Okay. Next, RBI's power to appoint chairman, MD. Again, people, learn, read. This is important. Audit of the balance sheet and profit and loss account. Audit and balance sheet of the profit and loss account. Okay. So basically, audit requirement, annual accounts must be audited by a qualified auditor. We all know this. RBI approval for auditor. Banks require RBI's prior permission for what? Before appointing, reappointing, or removing an auditor. Number 3, submission of audited accounts. Audited balance sheet, P&L, and auditor's report must be published and sent to whom, people? RBI. Fourth is RBI's inspection powers. RBI can inspect banks' account and books anytime to check compliance. Timeline, financial year ends 31st March. Submission deadline is June 30th. Very easy, people. Next, submission of returns on unclaimed deposits. Banks must report unclaimed deposits to RBI. Inactive accounts for 10 years. Helps track dormant funds and protect depositors' interest. So whose accounts are inactive, they have to report to RBI. Inactive for 10 years, they have to report to RBI, people. Next is reporting deadline within 30 days after each calendar year end. Fixed deposits, 10-year period starts from FD's maturity date, not deposit date. Example, if FD matured in 2015 but not withdrawn, must be reported in 2025. Easy, people. Next is regional rural banks must report to NABARD instead of RBI. Different regulator for rural banks. Okay. People, these forms also read, understand, and learn. Very easy, people. So we are almost done, people. Winding up of banking companies. Winding up of banking companies. Section 38 to 34. A banking company cannot voluntarily close unless RBI confirms it can repay all its debts in full. A company cannot close on its own as per their whims and fancies. They have to get RBI's permission. Compulsory winding up. High Court may order winding up under certain conditions, usually based on RBI's recommendation. So people, without RBI's recommendation, without RBI's permission, your bank cannot be closed down, no matter what. So RBI can apply for, RBI can ask the company to wind up when it fails to maintain minimum paid up capital. Number 2, loses banking license. Number 3 is prohibited from accepting deposits. 4, continuously violates Banking Regulation Act. Number 5, court approved scheme fails. If a bank is failing and it has entered into a scheme for revival, let's example of the resolution plan. In that case, a scheme fails, they have to wind up and it cannot repay debts or harm depositors. In that case, they have to wind up. They have to wind up. As simple as that, people. As simple as that. Next is, people, amalgamation of banking companies. Last topic of the chapter. Last topic of the chapter. Veni, Aishwarya, Vaishnavi. Is it interesting, guys? What is amalgamation? Merger of two or more banks into one to form a stronger institution is called as amalgamation. Example, Vodafone Idea was an amalgamation. Shareholders approval. Scheme must be approved by 2/3 in value by shareholders if you want to amalgamate. Number 3 is rights of dissenting shareholders. What about the shareholders who are opposing amalgamation? They can sell their shares at a price set by whom, people? Set by RBI. Number 4 is RBI's role. RBI will review, sanction the scheme and manages asset liability transfer. Dissolution of transferor bank. Transferor bank. After RBI's approval, the first bank which is being merged to another, that bank will be legally dissolved as on the specified date. Suspension of operation. RBI may temporarily suspend operations during the amalgamation process. In that case, the bank operation will be suspended during the amalgamation process. RBI can now initiate amalgamation or reconstruction without moratorium. But this is called as moratorium. So, without moratorium also, amalgamation can happen with the consent of RBI. So, examples of amalgamation people: SBI plus associate banks plus BMB. 1 second, people. Yes. Bharatiya Mahila Bank. PNB plus OBC plus United Bank. People, just 1 second. I've concised my notes too much. Yes, correct. Oriental Bank of Commerce. Oriental Bank of Commerce. These are the real life examples where banks were amalgamated. Easy, people. So we are done with the first chapter. We are done with the first chapter. Praveen Kumar, notes please. Praveen Kumar, you can get my notes from description link below. You can contact my team from description link below. They will send you the notes as quickly as possible. Siddesh Reddy. Hi, Siddesh Reddy. So guys, let's take a break of 5 minutes. Praveen Kumar, Veni, Aishwarya, Vaishnavi Nagaranjan, Jyoti Kumari. Let's take a break of 5 minutes. Chris, carry Chris. Let's take a break of 5 minutes. We will meet at 8:03 p.m. We'll meet at 8:03 p.m. Right, people? Give me a quick thumbs up, guys. Give me a quick thumbs up. Perfect, perfect, perfect. All right, people. So I will see you at 8:03 p.m. dot. Okay? Yes. Hello, guys. Hi, guys. Hi, guys. Hi, guys. Yes, people. Yes, people. Everyone with me, give me a quick thumbs up. Give me a quick thumbs up. Yes, people. Yes, people. I hope you all are doing super amazing, guys. Yes, yes, yes. People, let me ask you a very, very important question. I'm going to ask you a very, very important thought provoking question. I want to ask you a very, very important thought provoking question. People, tell me, what is that one thing, which you wish that was taught in schools and colleges? One thing that you wish was taught in schools and colleges. Was taught in schools and colleges. One thing. Yes, people. Vaishnavi, Aishwarya, Praveen Kumar, Veni, Jyoti Kumari, Carrie Chris, Guys, I'm curious about this one thing. What do you think from your side? Just tell me your perspective that one thing that you wish was taught in schools and colleges but was not taught. One thing that you wish was taught in schools and colleges but was not taught. People, for me, if you would ask me the same question to me, I would say that building, sorry, teaching financial acumen is a very, very important thing for me. If you would ask the same question to me, people, I would say that teaching financial acumen, teaching about finance to the children was a very, very important skill that was not taught in schools and colleges. Like this, what was one thing that was you wish that could be taught in schools and colleges but was not taught? To all the people who are watching after live session ends, let me know what you think in the comment section. Okay, people, give me an answer in the comment section. I would be happy to know you this. Aishwarya, Vaishnavi, Praveen Kumar, Veni, Siddesh Reddy. Guys, very, very curious. I'm very, very curious about this thing. What do you think was the one thing that was not taught in schools and colleges, which you think should be taught in schools? Yes, people. Yes, people. Yes, people. So, people, let me know your answer. Until then, I'm continuing with the next chapter. Okay, please let me know the answer. Well, just wait for 1 more minute. Hey Siri, 1 minute timer. Time management. Okay, that's amazing. Time management. Vaishnavi has said time management. Yes. Okay. So, until all the replies I will receive, until then, I will start with the next chapter. Let's start with the next chapter. Okay. So, people, the next chapter we're going to understand is RBI's role of RBI. Role of RBI. Agree with your point from my end. Apart from education part, they would have teach some of the reality how to face in future and how to handle situations. Fantastic, Aishwarya. Okay, this one is amazing. Good answer. Aishwarya is saying how to face or how to handle tough situations should be taught in school. Fantastic. Accept failure and move on to reach success. Okay, so basically, how to handle failure, how to face failure, how to manage failure and get out of from that failure to reach success is that one thing that you wish should be taught in schools and colleges, but they were never taught. Okay, fantastic. People, the reason why I am asking these questions is because people, when I know a certain number of topics that is really required to teach in schools and colleges. I want to teach all these things to my CA, CS, CMA foundation students. I want to teach this to my CA, CS and CMA foundation students so that we can train them from the beginning itself. We can train them from the beginning itself. Now the important question is, how am I going to teach? Basically, there is a book called as for time management, 7 habits of highly effective people. 7 habits of highly effective people. There is a book on this, Vaishnavi Nagaranjan, written by Stephen Covey. One of the amazing books ever written on time management. So I have read this book, so I can easily teach this to my students. For how to face and handle tough situations, there is a book called as You Can't Hurt Me. You Can't Hurt Me. This is one of the best books on emotional intelligence. Emotional intelligence. I will tell you people. Well, just 1 minute. I will just go out of the syllabus. This is the book, people. Master Your Mind and Defy the Odds. Can't Hurt Me, written by David Goggins. One of the greatest books written on emotional intelligence. So, people, if you want to gain all these skills, if you want to learn all these skills, please do read this book, people. Please do read this book. Sir, you read Tamil, sir. Vaishnavi, I cannot read Tamil. Money management. Yes. For money management, there is a book called as Rich Dad and Poor Dad. Rich Dad and Poor Dad. This book, 1 second, people, 1 sec. Rich Dad, Poor Dad. Robert Kiyosaki. Robert Kiyosaki. Robert Kiyosaki. It advocates the importance of financial literacy. Financial literacy. Importance of a strong financial foundation. Lesson 1, lesson 2, principle of paying yourself first, investing in assets, mindset and attitude towards money. Number 5 is value of taking risk, power of financial education. One of the best books written on financial management is this. Sir, sure, sir. Thank you for your book suggestions. Also, please suggest these books too. Also, please suggest these books too. Aishwarya, I did not understand this sentence. Suggest these books too. Yes, people. Yes, Aishwarya. Basically, people, if I suggest books to my students, they will not read it. So what I do is, I read the book again and then I teach them what I read from that book. Because people, it is very difficult to read a book. First time readers, it is very difficult to read the book. That is the reason why I read the book myself first. And during my lectures, in between my lectures, I try to teach them everything. Right, people? So, if you need anything, if you want to learn any skill, if you want to learn something new, people, just let me know in my YouTube comment section. Just drop me a YouTube comment section and contact me, and I will tell you the best book written on that topic. I will tell you the best book written on that topic. Okay, people. So with this, let's start our next chapter. That is role of RBI. Role of RBI. Very easy. Very easy. It's very easy. It's a cakewalk. Okay, people. So first topic is inspection of banks. We all know this. RBI's power comes from the Banking Regulation Act 1949. Purpose is to audit, supervise and monitor banks functioning, ensures risk detection, law compliance and financial stability, maintains the health of the banking system. Very easy. Prevents mismanagement, protects public confidence in banks. It builds trust and ensures accountability. It ensures that banks are held responsible. Example, XYZ bank gives loans without proper checks like PNB Bank. RBI inspects, finds irregularities, imposes penalty, and even forces reforms, forces suggestions, improvements. Right, people? The next is RBI's regulated role over commercial bank. Okay. Department of Banking Operation and Development. People, this is not important. Okay, this has ceased to exist now. Ceased to exist. Laws used banking regulation in 1949, RBI in 1934, and number 3 is other allied legislation. Other rules, people. Key functions of Department of Banking Operation and Development: licensing the banks, approving branch expansion, monitoring the reserves. Number 4 is supervising the management, and number 5 is handling mergers and closures. Is the main function of Department of Banking Operations and Development. A commercial bank wants to open 50 new branches. It requires RBI's approval. RBI checks financials before granting the permission to open 5 new branches. Robin Sharma books are also good, sir. Yes, Vaishnav Ranjan. This author writes books on which topic? Can you please tell me? Yes, people. So, laws used, we understood. What are the key functions? Understood. Example also we understood. Next is anti-money laundering. Law in focus, Prevention of Money Laundering Act. We understood it, people, already. RBI has created a dedicated anti-money laundering cell to track illegal financial transaction. We have learned this chapter in detail, people. KYC norms, suspicious transaction reporting. Number 3 is international tracking coordination with FIUs, financial institution undertakings. A customer deposits large cash sums into multiple accounts. Frequently, banks flags it. RBI investigates. Very easy, people. Yes. Banking policy, RBI rules. 2 topics, then we are done with the second chapter. 2 topics, then we are done with the second chapter. Banking policy, RBI rules. Okay. First is, people, capital adequacy. People, is my screen visible? Just let me know, okay? Just let me know if my screen is visible to you. Okay. People, let's understand this first using an example. Suppose Bank A has risky loans worth 100 crores. RBI requires Bank A to hold at least 9 crores in capital to safeguard against potential losses and prevent over lending. So banks have risky loans worth 100 crores. RBI will instruct the bank to keep at least 9 crores as a capital. RBI ensures that banks have enough capital to absorb losses. Under Basel III norms, Indian banks must maintain a capital to risk weighted assets ratio of 9%. Now, this is the clear example of this. If you have got risky loans worth 100 crores, you must keep 9 crores worth of capital with you, minimum capital, right, people? Next is income recognition, asset classification, loan provisioning. Let's understand this first using an example. Bank B lends 10 crores to a textile firm. Okay. After 90 days of no repayment, it's an NPA, non-performing asset. Bank B must provision for possible loss. If the loan is unsecured, 100% positioning may be required. Prevents overstatement of profit. If it is a risky loan, people, if repayment has not been received, it should be categorized as NPO. NPA, sorry. RBI sets rules for how banks must recognize income and expenditure and classify assets. If a borrower fails to repay the loan is classified as an NPA and the bank must set aside money for possible losses. Otherwise, everybody would think that it's a profit. Everybody would think that it's a profit, people. Next is valuation of investment portfolio. Banks invest in financial instruments like government securities. RBI guides how to value and report these investment. Example, Bank C holds 500 crores in government bonds. Their value drops to 480 crores. RBI mandates they report the loss immediately and not hide it, ensuring transparent financials. Very easy, people. Next is credit exposure limit. RBI limits how much a bank can lend to a single borrower. We already understood this. To prevent over concentration of risk, you should not keep all your eggs in one basket. Basic rule. Capital structure of public sector banks. Our Bank of India is under stress due to what reason? Due to bad loans. Government with RBI's oversight injects 10,000 crores via equity shares to strengthen the bank and allow continued operation, which means what? Bank is a savior. RBI is a savior for the banks that are failing. RBI regulates how public sector banks raises capital, including government-backed equity infusions. Next is Basel II and Basel III implementation. If bank XYZ gives risky loans, it must maintain more capital, just like you will keep extra cash before lending to an unreliable friend. Prevents banking collapses. Very easy, people. Next is, okay, RBI ensures Indian banks comply with international risk management standards. What are those? Basel II and Basel III. These require capital buffers, capital reserve based on the loan risk. Risk management guidelines RBI sets for asset liability management to ensure banks can manage liquidity and interest rate risk, which means what, people? If you are giving loans and if depositors are suddenly withdrawing money, then you should have a proper liability and asset balance, so that tomorrow suddenly if lot of depositors started withdrawing money, we should not run out of cash. In that manner, you should give loans so that you will receive interest, right, people? Next is like a shopkeeper who offers credit to customers but must repay suppliers early. In the same way, banks must match their short-term liabilities like deposits and long-term assets like loans to avoid liquidity mismatch. Compromise settlement of NPAs. RBI allow banks to recover bad loans via one-time settlement, which means what? If bank has given a loan of 100 crores to a person and that person is not paying you, then instead of lawsuits, court procedures, bank will tell them that you pay us 80 crores but one time final settlement. We will now waive off your 20 crores remaining money. Next is, people, foreign contribution regulation. RBI monitors and regulates how foreign donations are received and used by Indian NGOs to prevent misuse of foreign infused funds by NGOs towards illegal activities. So this is the banking policy, RBI's role, people. Everyone with me, people? Give me a quick thumbs up, guys. We are last topic of the second chapter. Then we are done. Give me a quick thumbs up, guys. People, I can completely understand that this chapter is a little dry chapter, people, but to make it interesting, I've included a lot of examples so that you can visualize scenarios. Yes, people? Perfect. Okay. Last topic is role of RBI in foreign exchange management. Controlling foreign exchange transactions. A startup wants to accept payments in US dollars from international clients. RBI will authorize the startups bank to handle the transaction legally. Which means what? RBI grants general and special permissions for dealing in foreign exchange unless already covered by other laws or rules, people. Number one is controlling foreign exchange transaction. Number two is restrictions on current account transaction. People, this we all have studied already under FEMA. We all have studied this under FEMA. Right, people? So quickly I will just read the head points. Capital account transaction also, RBI controls regulation of foreign exchange transactions. RBI can regulate, prohibit, restrict the following: foreign securities or residents, Indian securities to non-residents. Everything we have learned, people, already. Export earning regulation, RBI decides the time and manner in which exporters must receive and convert foreign exchange into foreign currency earnings into INR. A handicraft company exports good to Britain. RBI says payment in pounds must be received and converted to INR within how many months? Within 6 months. RBI can allow exemption from the requirement to bring foreign exchange back into India in special cases. In case if currency has been collapsed, if something wrong has happened in the currency fluctuation, in that case, RBI will give you exemption that you can bring in money after a specific period of time. Granting exemptions, authorizing person. RBI authorizes banks, NBFCs to deal in foreign exchange, issues guidelines and conducts inspection to ensure compliance. Authorized dealer, we have understood this in FEMA, people, right? So with this, we are done with the RBI, role of RBI. Now, let's come to the last chapter, people, last chapter. 3 pages. Then we are done with the banking laws. Then we'll be done with banking laws. Yes, people, everyone with me, give me a quick thumbs up, guys. Give me a quick thumbs up. People, once we are done with this chapter, we can proudly say that we have completed every single chapter in detail from the subject of corporate and economic laws. Yes, people, Vaishnavi, Aishwarya, Praveen Kumar, Siddesh Reddy, Veni, Jyoti Kumari, Carrie Chris. Where is Carrie Chris? Perfect, 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 perfect. Okay. Let's understand Sarfacy Act. Sarfacy Act. Well, just one sec. Yes, people. Yes, everyone with me, give me a quick thumbs up, guys. Vaishnavi is only there. Where are remaining guys? Guys, give me a quick thumbs up. Okay. So, people, Section 13 of Sarfacy Act is enforcement of security interest. Enforcement of security interest. Basically, this is a rule for asset reconstruction companies. These are the laws that should be followed by asset reconstruction companies. Let's say bank has given a loan to a person A 100 crores and that person A has defaulted in that loan. Then bank will sell this loan to asset reconstruction company for 90 CR. Asset reconstruction company will pay to the bank 90 CR, 10 CR. Okay, 90 CR. This asset reconstruction company will recover this money from Mr. A. Asset reconstruction company will recover this money from Mr. A. And once 100 crores have been received by Mr. A, in that case, asset reconstruction company's income is how much, people? How much? 10 CR. Right? So if banks have got a lot of non-performing asset, bad loans, they will sell this loan to asset reconstruction company, one-time settlement, so that they can remove these NPAs from their books of account. They can remove these NPAs, non-performing assets, from their books of account, and asset reconstruction company will give them bank 90 CR one-time settlement, and remaining 10 CR, it will be an income of asset reconstruction company. Then asset reconstruction company will recover all this money from the defaulter. Understood, people? So what all rules and regulations have to be followed by the bank and the asset reconstruction company is what we are going to understand in this chapter. Right, people? So with this, let's begin the first topic, that is enforcement of security interest. Direct enforcement of security interest. ABC Bank gives 10 crore loan to XYZ Limited. XYZ defaults. ABC will take over and sell the property without the court intervention. Secured creditors can enforce their security interest without court intervention. Number one is this, people, provision number one. Provision number two, default and notice period. Account must be non-performing asset. Number one, 60 days notice period must be served to repay. After 60 days notice period, if still they did not pay you money, enforcement, then only you can start, then only enforcement right you will enjoy. DEF banks 60 days, send 60 days notice to PQR industries after default. If still unpaid, machinery can be seized. If still unpaid, machinery can be seized. But 60 days notice period has to be mandatorily be served. Number three, contents of notice and right to object. Notice must state amount due, number one, and secured assets that are mortgaged. Borrower can object. Creditor must reply in 15 days with reasons. Very easy, people. JKL Finance tells GHI Enterprises to repay 1 crore or factory equipment will be seized. GHI objects and JKL must reply to the objections of the borrower. Next is measures available to creditors. They can take possession. They can take over the business of the borrower. They can appoint a manager to manage the business. Number four, they can direct the creditors. They can direct the, okay, 1 second, I will tell you one thing. A, B. A is supposed to pay B 10 crore rupees. A has not paid money to B. Now, there are C, there is D, there is E who are supposed to pay to A money. B can ask all these creditors to pay money to A. If debtors of A will pay money to A, then only A will be able to pay money to B, right? So in this way, direct third parties to pay to the creditor. They can pay to A or they can directly pay to B. Easy, people. RST's factory was seized. UVW hotel run by manager. XYZ's clients asked to pay to the bank directly. Okay, this is a difficult example, so let's stick with this example only. Okay, people. People, is my example clear to you? Give me a quick thumbs up, guys, if my example is clear to you. If you are supposed to pay me money and if you have not paid, I will ask your debtors to pay money directly to you, or I will ask your debtors to pay money directly to me instead of you. Very easy, people. Okay. People, if you have got any doubt with respect to any topic, just let me know in the comment section. Okay. Next, payment to creditor, valid discharge. If third party pays creditor on borrower's behalf, it's a valid discharge. If your debtor pay me money, then it's a valid discharge. Tata Motors pay 2 crores directly to XYZ Bank, ABC Private Limited, can't object. Very easy. Sale of immovable property. If no bids at reserve price, auction postponed. Which means what, people? If you are supposed to pay me money and if you have not paid, I can keep your assets at auction. If nobody has given me any bid to sell the assets, then what I will do is I can myself bid in the next round and price can be adjusted against the dues. No bids for DEF's building an 8 crores. XYZ bank bids and wins and the amount is adjusted. Effect of transfer of asset. Buyer gets full ownership free from borrower's claim, which means what? Reliance buys PQR's factory in auction. PQR can't claim it later. Once any asset is purchased at auction, you cannot claim that asset back. Recovery of cost. 8 crores recovered from JKL. 50 lakhs for cost and 7 crores was actual loan borrowed. Actual loan borrowed was 7 crores, but you recovered 8 crores. In that case, first, people 50 lakhs for cost, you will not pay. Number 2, 7 crores remaining. Balance 50 lakh rupees, you have to return it. Loan is 7 crores is the loan, but amount recovered is 8 CR and the cost is 50 lakhs. So 8 CR minus 50 lakhs minus 7 CR. 50 lakhs, this is the surplus that you received, which does not belong to you, but it belongs to the borrower. So you have to repay to the borrower the balance surplus amount. Very easy. Next, repayment before auction, stop sale. That means what? Before I keep your assets at auction, you pay me the money. In that case, the auction can be cancelled. MNO Hotels repays 15 CR before auction notice. Sale can be stopped. If full dues plus cost paid before auction notice, sale can be stopped. Next is joint financing. ABC Limited owes 100 crores. SBI plus HDFC hold 75% and agree. ICICI must comply. SBI, PNB, ICICI, they together have given loan to XYZ. Now, 50 CR, 10 CR, 50, 10, 60, 40 CR. So which means for people 60%, whatever SBI bank and PNB bank together they will decide, that decision will always prevail. That decision will always prevail, people. 60% must agree, decision must be binding on all. Special case, company liquidation, this will workers' dues get priority. A secured creditor must deposit dues before taking proceeds. People, we all have studied IBC, waterfall arrangement. Same principle have been applied over here also. So we are done with the enforcement of security interest. Okay, people, everyone with me, give me a quick thumbs up, guys. We are almost done with the last chapter. We are almost done with our last chapter, people. Yes, people, give me a quick thumbs up, guys, if you guys are with me. People, last topic, then we are done. Yes, people, quickly give me a sweet thumbs up, guys. Yes, people, yes, people, yes, people. All right, all right. Now let's come to the second topic, that is functions of asset reconstruction company. functions of asset reconstruction company. People, this is very, very interesting. This is very, very interesting. ARC acts on behalf of a bank or a financial institution for what purpose? To recover dues from borrowers. I've told you people over here, asset reconstruction company will recover money from the borrower. Okay. A bank gives 100 crore loans to a company. The company defaults. The bank hires an asset reconstruction company to recover the dues. Asset reconstruction company negotiates or sells assets. ARC charges a fees. Okay, fees is mutually decided. ARC does not take ownership of the loan. Okay. Number 2, manager of secured assets. ARC manages assets that was seized. ARC manages asset that was seized. Real estate company defaults 500 crores. Bank seized mall as collateral. ARC will now manage the mall, collect the rent and keep it running. ARC must not incur any financial liability. They must not incur any expenses. Fees are mutually agreed between the asset reconstruction company and the bank. Asset reconstruction company cannot use its own money to maintain or repair assets. Basic rule, people. Next is court appointed receiver. ARC can be appointed as a receiver by a court or tribunal to manage and sell the assets. Company in dispute with multiple banks, court appoints ARC to handle and okay. So people, company has taken loans from various banks. So it is in dispute as to the money will go to which bank first. So in that case, court will appoint an ARC. Court will appoint an ARC to manage and sell the assets. Whatever money will be received, that money will be paid in proportion to the amount of dues taken by the banks, people. So appointment is through judicial authority. ARC must follow the court directions. So people, other functions are, number 1 is agent for recovery. Number 2 is manager of the secured assets. And number 3 is they can also act as a court appointed receiver. They can also act as a court appointed receiver. Now, restrictions on asset reconstruction company. What are the restrictions on asset reconstruction company? Number 1, they should only be involved in their core business. They can only engage in securitization and asset reconstruction. People, asset reconstruction is, we know, recovery of money. Recovery of money. Can anyone tell me the meaning of securitization? Can anyone tell me the meaning of securitization, guys? Yes, people. Can anyone tell me the meaning of securitization? Vaini, Vaishnavi, Aishwarya, Praveen Kumar, Siddesh Rede, Jyoti Kumari. Yes, people. Can anyone tell me the meaning of securitization? Securitization. Yes, people. Can you tell me the meaning of securitization? Guys. Okay. So people, let's understand the meaning of securitization. So people, we all know till here that if debtors do not pay money to banks, then what will happen is it will be considered as a bad loans for the banks. Let's take an example that bank has given to debtors loans worth 100 crores. Bank has given to debtors loans worth 100 crores. Now they have defaulted in the payment of loans. They have defaulted in the repayment of loans. Now what? Now this is the step 1. Okay. Now next two is asset reconstruction company will pay to the bank 90 cr. Pay to the bank 90 cr. This is step 1. This is step 1 is asset reconstruction company will pay to the bank 90 cr and they will try to recover 100 cr from the debtors. They will recover 100 cr from the debtors. Now the moment they receive 100 cr, now 10 cr will be their commission. Till here we know the process. Till here we know the steps involved in how asset reconstruction company will recover money from the debtors. Okay, till here we know. Now the important question is asset reconstruction company will get this 90 crores from where? How will asset reconstruction company will pay to the bank 90 cr upfront? From where will the money come to asset reconstruction company? This is where securitization comes in. People, we understood when we were learning the chapter of FEMA, we understood the meaning of real estate investment trust, infrastructure investment trust, where the SEBI appointed entity, what they will do is they will collect money from the investors, they will purchase the property, and the interest they will receive, the income, the return they will receive, they will give it to the investors, right people? In the same way, securitization also performs. So people, those who think that they can take a huge risk, they can take risk and they can expect income. What they will do is basically people, A, B, C, D, E, F, G, all are investors. They together they contribute 90 cr to asset reconstruction company. Together they contribute 90 cr to asset reconstruction company. Asset reconstruction company will pay this 90 cr to the bank. Now what? Now asset reconstruction company will they will recover 100 cr from the debtors. The moment they receive 100 cr, 10 cr will go as commission and remaining money will be distributed as returns to these people. Remaining money will be distributed as returns to these people. This is called basically people, the money that these investors put in A, B, C asset reconstruction company, they will pay them money, and asset reconstruction company will give them securities. This is called as securitization. Good evening, sir. Preparation going good. Great, sir. Chandrasekhar Gopal, sir. Amazing. I'm so happy to hear this. Pass through certificate, pay through security. Perfect. Divya Digada, amazing. Fantastic. Okay. So basically, A, B, C, asset reconstruction company. They will pay them money, they will give them securities. B will pay them money and they will give them, asset reconstruction company will give them securities. Again, money, and next is securities. Now with this money, they will pay to the bank. Now that they have paid to the bank 90 cr, they will recover this money from the debtor 100 cr. This is how securitization functions, people. This is how securitization works. Okay, so now let's come to the concept part. So core businesses, asset reconstruction company can only be engaged in securitization and asset reconstruction. No other business without approval. ARC cannot engage in any other business except prior approval of RBI. And last is exit from non-core business. If an ARC was doing other business before SARFAESI Act, it must exit within 1 year of the beginning of the SARFAESI Act. They must immediately exit the previous business within 1 year from the commencement of SARFAESI Act. Very easy, people. So three things. Number one is core business. Number two is no business, no other business without approval. And number three is exit from non-core business. So RBI will do the supervision. They will also frame policies and give directions to ARC. With this, people, we are coming. We are on the last topic of the entire syllabus. We are on the last topic of the entire syllabus. Yes, people. Now, appeal mechanism again under SARFAESI. Appeal mechanism under SARFAESI. People, if you are a borrower and I am the bank, if you defaulted and paying me money, I can now take possession of your business. I can take possession of your assets. Now, what do we say? What rights do you have? Basically, people, what remedies do you have against me? What remedies do you have against me? I have taken possession of your asset. I have taken possession of your business. Now, what rights, what remedies do you have against me? We're going to understand. You can go to people debt recovery tribunal, borrower or any aggrieved party. After secured creditor takes possession of assets or enforcement action taken place, you can challenge the lender's action if it seems unlawful or unfair. Let's say I have given you 60 days notice. Within 50 days, I have taken possession of your assets and business. This is very, very wrong, people. So in that case, you can challenge my decision at debt recovery tribunal. No fixed time limit in act, but should be very, very immediate. Now what? Now debt recovery tribunal have passed order in my favor again. Now again, what remedy do you have? You can go to debt recovery appellate tribunal. After receiving DRT order, appeal against DRT's decision within 30 days of receiving DRT order. Right, people? Now what? What are the compliance requirements that you should do? Borrower must deposit 50% of outstanding debt as determined by DRT or creditor, whichever is lower. As determined by DRT or creditor, whichever is lower. Tribunal may reduce it to 25%, but not below that. So minimum 25% deposit you have to keep as deposit. Prevents misuse of appeal process and ensures partial recovery. It says that you are really, really serious. You are not at default. Then that is the only reason why you are appealing. ABC limited appeals against DRT order. Amount owed is 10 CR. How much will be deposit requirement? 5 CR. Lowest permissible is 2.5 CR. Key takeaway is appeals are allowed under Act but requires mandatory deposits to avoid frivolous, to avoid false delays. The DRAT has limited discretion and cannot reduce the deposit below 25%. So with this, we are done with the banking laws, guys. We are done with the banking laws. Yes, people. So people, now I can say that we are done with the complete syllabus of corporate and economic laws. We are done with the entire syllabus of corporate economic laws. From tomorrow onwards, we are going to solve as many MCQs as possible. From tomorrow onwards, we are going to solve as many MCQs as possible. Yes, people, everyone who all are watching right now, please let me know in the comment section. And whoever has got any doubt after watching this live session, if you are watching it tomorrow or day after tomorrow, anytime after this live session, if you have got any doubts, people, please let me know all your doubts in the YouTube comment section of this video. Okay, people? Within 12 hours, all your doubts will be resolved. All your doubts will be resolved. Yes, people? So let's end the session here. People, it really means a lot. You are staying with me. Thank you so much, people. Thank you so much. It really means a lot, people. So people, have your dinner. Take care of yourself, people. Eat well, sleep well, study well. Thank you so much for watching, people. I will see you tomorrow in the MCQ session soon. So, shall I end this session, people? Give me a quick thumbs up, guys. Give me a quick thumbs up. Okay, okay, okay. Guys. Thanks, sir. Please request to share material insurance and banking. Chandrasekhar Gopal, sir, did you click on the description link below? Okay, Gopal, sir, just click on the description link below. The same way you got the marathon notes, the same way you have to get this note also. Click on this link below, people, below, sir. Then you have to fill a form, and once you fill the form, people, you will get a message from WhatsApp. Our team will send you all the notes from the WhatsApp, through WhatsApp. Okay, people? Yes. If you did not get the notes, click in the description link below, fill the form, and my team will send you all the notes, whatever notes you need, via WhatsApp. Okay? Right, people? So, people, thank you so much for watching. I will see you tomorrow in the MCQ session soon. Bye bye. Okay, once Robin Sharma book is based on personality development and business strategy. Amazing, amazing. Vaishnav Ranjan, I will do read the book of Robin Sharma. Okay, this is a very, very important, people. Personality development is also what I'm trying to teach to my CA, CMA, CS foundation students. Okay, thank you so much. Thank you so much. So, people, let's end the session here. I will see you tomorrow in the live session soon. Thank you so much for watching. Eat well, sleep well, study well, people. Take care of yourself. Right, people? So, I will see you tomorrow. Yes. Bye, Veni. Bye, Vaishnavi.